Let me tell you something that most people will never admit out loud. $1,000 feels like nothing. It feels like a drop in the ocean, a rounding error, barely enough to matter. And that's exactly why most people never turn it into anything. They look at that number and they think, what's the point? But here's what I know. After decades of building, investing, and yes, losing money at every level imaginable, $1,000 invested with the right strategy and the right mindset is not nothing. It is a starting line. And how you treat that starting line tells me everything I need to know about whether you'll ever be wealthy. I'm going to walk you through exactly how I would turn $1,000 into $100,000, step by step, no fluff, no lottery tickets, no get rich overnight nonsense. This is how real wealth is built. And if you stick with me through this entire video, I promise you will walk away thinking about money differently than you did when you clicked play. But before I get into it, I want to hear from you. Drop a comment below right now and tell me, where are you starting from? Do you have that first thousand sitting somewhere doing nothing? Are you still trying to scrape it together? Or have you already started investing and you want to know how to scale? Tell me where you are, because I read these comments, and your answer might just shape what I cover next. Now let's get to work. The first thing you need to understand is that $1,000 is not an investment problem. It's an education problem. Before I touch a single market, before I open a brokerage account, before I even think about a stock ticker, I'm spending that first phase of this journey making sure I understand the game I'm about to play. And I'm not talking about spending money on courses or some guru's masterclass. I'm talking about reading, studying, understanding how compound interest actually works in real numbers, understanding what risk-adjusted returns mean, understanding the difference between an asset and a liability, because believe me, most people walking around out there don't actually know the difference. They think their car is an asset, and that mistake alone will keep them broke for decades. Here's a fact that I want you to sit with. If you invest $1,000 and earn an average annual return of 20%, which is aggressive but absolutely achievable in certain asset classes with the right approach, you would cross $100,000 in roughly 26 years, purely through compounding. Now I know what you're thinking. 26 years, that sounds like a long time. But that's without adding a single additional dollar. The moment you start adding to that pot, even modestly, that timeline collapses dramatically. This is why I say the biggest weapon any investor has is not capital, it's time and consistency. But you can only take advantage of those weapons if you start, and you start now. So step one, start. Open a brokerage account. I'm not going to tell you which platform because that changes constantly, but pick one that's reputable, that gives you access to index funds and individual stocks, and that doesn't charge you an arm and a leg in fees. Fees are silent killers. A 1% management fee doesn't sound like much until you realize it can cost you tens of thousands of dollars over the course of your investing life. Always read the fine print. Now, with that $1,000, here's what I would actually do. And this is the part where people usually expect me to say, buy this hot stock or crypto is the future. No, with $1,000, I am diversifying immediately. I'm putting a portion of that into a broad market index fund, something that tracks the S&P 500. Why? Because over the last 90 years, the S&P 500 has returned an average of about 10% per year, and it has recovered from every single crash in history. Every one. People who held through 2008, through the 2020 COVID crash, through every panic and every headline that screamed the world was ending, they won. The people who sold in fear, they lost. So part of that 1,000 goes into the market broadly, immediately. But here's where it gets interesting. I'm not putting all 1,000 into index funds and walking away, because if I did that alone, I'd be waiting decades for significant growth. Instead, I'm using a portion, maybe 20 to 30%, to invest in myself in a way that has a direct and measurable return. That means developing a skill that I can monetize. Maybe it's learning how to code. Maybe it's copywriting. Maybe it's digital marketing. Maybe it's learning how to analyze financial statements so I can eventually pick individual stocks with real conviction rather than guessing. Whatever it is, I'm choosing one skill, I'm becoming excellent at it, and I'm converting that skill into income. Because here's the truth that nobody wants to say. You cannot invest your way out of a low income. You have to earn more. The gap between what you earn and what you spend is called your savings rate. And your savings rate is the fuel that feeds your wealth engine. So let's say you develop that skill and you start generating an extra $500 a month from freelancing, consulting, or some form of side income. That's $6,000 a year going directly into investments. Now we're talking. Now we're watching compound interest become a real force in your life, not just a concept in a textbook. From there, as your portfolio grows and your income grows, I want you thinking about what I call the second layer of wealth, income-producing assets. This is where serious money is made. Dividend-paying stocks, REITs, which are real estate investment trusts, or eventually actual real estate if you can get there. The goal is to build a portfolio that pays you whether you work or not. That is the definition of financial freedom, and it is available to anyone willing to be disciplined long enough to get there. Now let me talk about what stops people, because this is just as important as the strategy. The number one killer of investment returns is emotion. I've seen it destroy intelligent, educated people. They buy when things are hot because greed kicks in. They sell when things drop because fear takes over. And every time they do this, they lock in losses and miss recoveries. The market is a machine designed to transfer money from the impatient to the patient. If you can train yourself to be boring, to set up automatic investments, to stop watching the ticker every day, to think in decades instead of days, you will outperform the vast majority of retail investors without being smarter than any of them. Discipline beats intelligence in this game almost every time. Here's another thing. Stop looking for shortcuts. I know that's not what you want to hear, but the proliferation of get-rich-quick content online is genuinely dangerous. When you see someone promising you 10x returns in 30 days, what they're actually selling you is risk you can't see, and a product that benefits them, not you. In my experience backing hundreds of companies through Shark Tank and my own venture investments, the businesses and investments that perform consistently over time are the boring ones. The ones built on real fundamentals, real cash flow, real margins. Glamour is expensive. Boring is profitable. As your portfolio approaches 10,000, then 20, then 50,000, your approach evolves. You start to have enough capital to take calculated, educated risks on individual positions. Maybe you allocate 10% of your portfolio to higher growth opportunities, an individual stock you've done serious research on, or a small business you can directly invest in. But that 10% is your aggressive bucket. The rest remains disciplined, diversified, and compounding quietly in the background. Getting to $100,000 from 1,000 is not a mystery, it is a process. It requires a combination of consistent investing, active income growth, expanding financial knowledge, and the emotional discipline to stay the course when every instinct tells you to panic. Most people give up somewhere in the middle, not because the strategy failed, but because they did not truly believe they could get there when they started. That belief gap is what separates people who build wealth from people who watch others build it. I've built companies from scratch, I've lost money and rebuilt. I've watched people with far fewer resources than you probably have right now turn small sums into generational wealth, purely because they refuse to make excuses and refuse to quit. The strategy is not complicated. The commitment is what's rare. So here's what I want you to do right now. Don't close this video and go back to scrolling. Take one action. 1. Open that brokerage account you've been putting off. Transfer that first $100 or $500 or $1,000 in. Or pick up a book on investing that you've been meaning to read. The journey from 1,000 to 100,000 starts with a single decision made today, not someday. And remember, drop that comment below. Tell me where you're starting from. Tell me what's been holding you back. Because the first step to building wealth is being honest about where you actually are. I want to hear from you.